Live from NASDAQ's Marketsite, I'm your host, Kristina Ayanian, and joining me today is Phillips Edison CEO, Jeff Edison. Jeff, thank you for joining us.
Yeah, thanks. It's great to be here. And we started this business almost 30 years ago.
Wow.
With a focus on buying the number one or two grocer in a market, and then having it surrounded with small stores that are basically necessity based. So when you wake up on a Saturday morning and you need to get your necessity goods done and you need to get the groceries bought, the 1.6 visits people make a week, that's where they go. And that's what our target has been, to buy those centers.
And you've grown to become one of the nation's largest owners and operators of grocery anchored shopping centers. That's really impressive.
Well, Kroger, we're Kroger's largest landlord,
Wow.
and we're Publix's second largest landlord, and they're our number one and two neighbor in our portfolio. So yeah, we go where the really strong grocers go, and we try and play off of their draw to the center to help find a really good shopping experience for the end customer.
What do you think attributes to your success? Why should investors invest?
Well, I think the market we're in today is actually particularly salient for what we're doing, which is, what we do is we provide really good alpha because of our internal and external growth in our portfolio, but we also have protection. We have less beta. And in this environment where there is a lot of uncertainty in the market, it's a really good spot to be in. And it is driven by that grocer who provides 34% of the income, and then the small stores who are necessity based. So it's relatively recession resistant, so that you have that strong base. And then we have a big acquisition program as maybe we'll talk about later, but that's part of our external growth, in addition to our ability to grow vacancy and grow our rents.
Well, let's talk about that acquisition program. What is it? Can you please elaborate on it?
Yeah, so we did our IPO about 2 years ago, and our plan at that point was to buy $1 billion worth of assets over 3 years, and to then raise some additional equity and bring our debt into the right thing. Fortunately, we've now about $500 million into that target, and we're at the same balance sheet we have. So we have about $1 billion worth of runway from here over the next 3 years to buy additional grocery anchored shopping centers. And it's a market that's in a little bit of change, as a lot of the different real estate markets are. But we're kind of working through that right now. And we had a really good first quarter where we bought almost $100 million worth of properties, and well on our way to our target between 200 and $300 million.
That's incredible. And just from NASDAQ's perspective, it's been incredible to watch your growth throughout these past 2 years as a NASDAQ listed company. We're very proud and happy to have you.
Well, we're very glad we got on NASDAQ, and it's the resources you guys have and the support you've given has been awesome and really helpful.
Thank you. One thing that I find really unique and what really attracts me to your company and to talking about this is how you refer to your tenants as your neighbors. Yeah. Why is that?
Well, it's really a mindset. For so long there's been this tenant landlord relationship, and as we look at our business, we have to drive the success of each retailer that's in our center. And if you treat them in that old sort of landlord, you won't get where you want to be. Our success is driven by their success, and so when we look at it, we're trying to create a community in each of the 300 properties that we have. And part of that community is you're building a neighborhood, right? And so you've got to have the neighbors who see that as being part of something that's important to each community that we go. And it's a difficult business because we actually compete in 300 different businesses.
Wow. Each
around that 3-mile radius around that shopping center with for the necessity goods for the customer.
I love that sense of creating community with your neighbors and your tenants. Yeah. And I feel like it really derives from your internal culture and it's translated externally. And you've created an external culture with your neighbors.
Yeah, it's always driven by the team. Mm-hmm. And we've actually been voted the last 6 years best place to work in Cincinnati.
That's incredible.
Which is where our home base is. And that's driven by a culture that has been built over 30 years. It's not something we're making a culture kind of thing. It's continuous growth. the ability for people to keep learning and keep creating opportunities for every associate in the company, so that you start to build a culture of not only a culture of winning, which we've been very good at, but also a culture that, of building a place where people want to be.
Absolutely.
And that's important.
And you've built that recognition, and you've been accredited with that recognition as well.
Yeah.
Have you received any feedback from your neighbors about neighbors?
They're very embracing of it. Always critical about certain things, and that's part of the whole thing. But as a whole, they see it as as a real positive. And if you look at like just the last quarter, 95% of our small store spaces renewed.
That's incredible.
In the first quarter, and that's a record number for us. It's testament to the fact that we're building an environment where they can be successful, and they like being neighbors. I think they like making money probably more, but they do see that as a positive.
And as they grow, you grow as well, right? It's a two-way street.
Absolutely. And we were able to get almost 16% rental spreads in the first quarter from those renewals.
Wow.
So it was, and so we're doing well while they're doing well.
That's amazing.
Yeah.
Have you seen any changes in the types of neighbors that are newcomers?
Yeah, it's, I mean, the biggest change has been really on the medical side. They call it MedTail now. When it gets a name, it's becoming popular.
And you created that, and you created that, you
Yeah.
fostered that, and it all comes back to that sense of community.
Yeah. And it's, so there, and it takes on a lot of different types of different retailers that are, medical focused, but they're, the chiropractor, they're the dentist, and actually, what's getting put in there now is animal veterinarians.
Wow.
So it's actually it's like an animal hospital kind of thing. So yes, that's probably been the biggest change. Continues to be strong demand on the fast food side. That seems to be growing.
That's great to see, especially coming out of the pandemic. Have there been any changes or challenges that you've had to overcome, or has the pandemic really stimulated your growth?
Well, there were a number of tailwinds that were pre-pandemic. Suburbanization was one of them. The work from home was probably less, but starting to get some kind of traction. Buying local, all of those things have created tailwinds for our business that were, they were accelerated by the pandemic, but they've continued post-pandemic. And we continue to see those as really strong for us, because that's where our shopping centers are. They're in the suburbs, and we're getting more people closer to our center more of the day, which helps our neighbors make money. And that's been a very positive. And while that's happened, there's been very little new construction really over the last 15 years in the grocery-anchored shopping center business. So really strong demand with when you have limited supply. Has given us, has allowed us to have the strong operating results that we've had over the last few years.
That's incredible, and you've really grown tremendously these past couple of years. What's next for Phillips Edison?
We're always looking. It's always, we're very opportunistic. We actually have a market-leading balance sheet, which does give us the ability to act in an opportunistic way. We'll see. I think it's early in sort of what's going to happen, or in the economy and with the consumer. So we think we'll find some really strong opportunities from it.
Yeah, the future is definitely bright. Thank you so
okay.
much for joining us. It was great to have you back, and we
great.
truly are thankful for our partnership.
Yeah, well, it's been a great partnership for us as well, and we thank you, and thanks for your time today.
Thank you so much.